All right, Tim, we're talking politics today.
Politics? I love
Yeah,
politics,
we're
man. You
getting
know
into it,
that?
man.
What the
So,
hell?
so did you catch the debate by any chance?
Love the debate. I thought it was awesome, man. I just saw, unfortunately, quite honestly, I saw two older gentlemen struggling to demonstrate their performance and their position.
Well, I
I
heard I
understand both.
heard Biden had a cold and that he was given bad debate prep, and that otherwise it's going to be fine.
Except for he kind of lost thought in the middle of some of his presentation, did he? I mean, that was kind of a catch-22.
Yeah, and then staring into the abyss with the open mouth. I think that they probably need to coach him better next time to close his mouth. Just so it doesn't give the impression that maybe you've lost the ability to
No.
be aware of consciousness.
Not so much, not so much. It's a challenge. I mean, quite honestly, you look at it and you say, you know what? At one point, he was a very intelligent, and I don't doubt that he still is a very intelligent man. But at
Yeah,
the same time, there's a certain point in our age that we reach where we're just not as cognizant of what's going on. And I think, I mean, his performance is challenging. There's no question about that. And then, Mr. Trump, he seems a little out of control sometimes. But hey,
but you know what? He seemed more in control than he normally does. So,
you know
so
what?
it,
I have
it
to respect
seems
that
like
he wasn't as
you know
his
what I mean,
normal. Yeah, no, I agree. He wasn't his normal um
right?
aggressive self. Let's call it that. How about that?
Yeah.
Yeah.
So speaking of Biden, I
Yeah.
was looking for some housing news today, and I pulled up the White House's .gov's website, and I was looking at some of the proposals from the Biden administration for helping lowering housing costs for working families.
Right.
I think that's an honorable
I think that's a
endeavor.
I think it's huge, especially affordability out there. It's tough. There's no question about it.
So
But
before I get into it, Tim, let me just ask you personally what you think would be the best thing that the feds could do in order to lower housing prices or affordability for Americans.
Well, I think three things are going to occur. I said number one, of course, lowering interest rates to me is going to help, and I think right now we're all in a recession. I think the banks are having some severe financial challenges, and when they've raised credit card interest rates up to 36%, I think it's ridiculous. So,
Mhm.
number one, you want to make life more affordable? Let's lower the rates. Let's lower the cost of entry. Now,
Yep.
giving people money that does not solve anything. Because you and I both know we suddenly start giving everybody $25,000 as a first time home buyer. This is going to be great. What's that going to do, Brian? I'm just be honest with you. Your
Yep.
prices are going to go,
Yeah.
they're going to continue going sky high. Now, what I love to see, why don't we change the way we do an FHA loan? Why do we need 3.5% down that we're financing the PMI on top of that? Why don't we really restructure it appropriately and say, look, it's here's a no money down program. Okay, truly an FHA loan, you got a minimum score, you got a 680 credit score, we'll let you put no money down. You got a 640 score, you got to put down 1%. You got a 600 score, you got to put 3.5. You got a 580 score, you got to put 5. Just kind of tear it down based on credit. That's number
Okay.
one.
That makes
That
sense.
to me would be my recommendation. Okay. That would be the number one driver because FHA is a great product. And right now it has a very strong, positive balance sheet, which means it has reserves. Those reserves are designed to assist in deficient and difficult times. I think that would be huge. That would be my number one recommendation. Okay.
Okay.
That would be easy. Okay. That's number one. Number two, let's offer maybe, and I know this is going to think this is nuts, maybe a 40 or 50-year mortgage. Maybe we need to extend the term, and just say, listen, for first-time home buyers, yes, you can get into a 50-year mortgage. I know it's kind of crazy, right? But
I
just
don't
say,
hate that
listen,
idea.
but you know what? Why don't we extend the term out and just say, because look, your goal is to get into a house, is to begin to establish equity, to give a payment that's going to be a little bit more affordable. There's nothing you can do, Brian, to push the prices of homes down anymore, right?
Well, there is because that's going to be my suggestion. But I like
Okay,
your
I
ideas
don't know
so
how to do
far.
it. So I like cutting the rates. I like changing the way that we have the down payment requirements, number two. And then number three, I say go with a longer term mortgage based on, again, everything's going to be score driven. Everything is going to have some risk advertisement to it. And I think that's the way to roll. It really is. And I think that's, if you're concerned about the upfront, the PMI market, fine. Just say, look, you know what? If you go with, any FHA loan, the 50-year mortgage is going to have a 2% or a 3% PMI hit on it. It's a way to adjust it. Do not put them into adjustable rate mortgages. That's what happened to 07 and 08. Okay. Don't put them into something that they cannot, gradually
That's a
adjust
headline
to.
right now.
Yeah.
400,000 Americans are going to adjust this year, and they're going to get cremated.
They're going to get hammered. And so that's my whole point. Look at the commercial market, same thing. So if I was running HUD right now, what would I recommend? Those 3 factors. That's it right there. That would solve the market.
Okay. So I agree with you that those would all be good. I think that, I don't understand exactly how the Fed and the US government work together to set interest rates, and then all the factors that go into what interest rates are set at and why. I've heard arguments that interest rates are still way too low if we want to have a real economy. You hear all these different things. So lowering interest rates would be potentially good. It seems like when rates were lower, people were able to buy and sell things easier. The economy was slicker. There was more oil in the gears, and it seemed like things were moving faster, and it was a lot easier, and people felt better about it. How that affects the overall economy in the long term, I can't speak to that. I think that the housing is driven by a shortage. So in the midst of these crazy high interest rates, house prices have gone up 5.6% in the state of Maryland just this year, on top of, and again, when we talk about like inflation going up or house prices appreciating, we have to understand it's on top of what it's already done. So if you say, well, inflation is only 2%, it's only 2% on top of what it's already at.
Right.
House prices have gone up 5% on top of what they're already at. They're not like going to go down anytime soon. So I think that the shortage of housing is actually the bigger factor. It's just straight up supply and demand, number of people that want to buy a house versus number of people that currently are selling a house or are willing to sell their house. And I think what you could do is all these incentive programs that they have out there could be adjusted to work towards lower cost houses. Like if you built either structured based around the size of the house, 2,500 square feet and lower, or I don't really like the idea of segregating things, putting things in areas that, are better than others. Like, I don't know if we should say we should put these houses in certain areas. I think I like things that are kind of fair for everyone. So if they were to just come up with an incentive for a house, for builders and or the home buyers to build these houses, to give them some type of a tax credit that says if you build a house under $400,000, you don't have to pay taxes on the profit or something like that, like we do with mortgage, like we do with home mortgage insurance that you pay every month. You get the tax credit at the end of the year. If the builder was able to write off tax-free profit on houses under $400,000, the other thing would be to, and this was kind of a Trump thing, would be to really push hard to deregulate some of the restrictions that they put. Now, I know these are all local restrictions, but I think the Fed has a good track record of imposing their will on the people, like they do in the on the highways and in the school systems, as an example. If they were to push for some deregulation where you don't have to have, for instance, 3 acres, and you don't have to have, all these boxes checked, and to push for the ability to have multiple living spaces within a piece of property, accessory apartments, duplexes, things like that, I think would be a good incentive. So that's my idea and your idea. So the Biden administration has come up with this.
Yeah.
Go ahead.
Well, I wanted to one last thing, and I think this
Yeah.
is important. And the Fannie Mae sold blocks and blocks and blocks of homes.
Yeah.
Okay. At a severely discount rate to these hedge funds. And let's face it, the hedge funds have the advantages to all the situation. If it were at all possible, why don't we actually force the hedge funds to put their houses on the market and sell them?
So they actually do have something for that. And this is like, I'm not,
I mean, I'm a capitalist. There's no question about it. But at the end of the day,
a meritocracy.
they've made their money. I mean, there's no question about that.
Yeah. So I don't disagree with all these proposals. but some of them are absolutely horrible in my opinion. So the first one is the mortgage relief credit, calling on Congress to pass mortgage relief credit, provide middle class first time home buyers the annual tax credit of $5,000 a year for 2 years.
Right.
I don't think that's really doing much for anybody because that comes out when you file your taxes. So instead of getting $2,500 tax refund, you get a $3,000 tax
Well,
refund or whatever it is.
and it's after the fact.
It's
That's
after
you
that's
nailed
my
it.
point is when you
Yes,
file your
you nailed it
tax,
right
it
there.
really
After
means
the fact.
nothing. It's not going to
No.
change anything.
No.
And I don't like the idea of just giving tax credits for the point of giving tax credits. Like we actually
No.
need some money
Right.
to pay down some of this debt. So I don't know if I love that idea. The
No.
second one is down payment assistance for first generation homeowners.
Okay.
Is that the same as a first time home buyer, Tim?
No, and that's and that just seems a little odd because first generation means that you're first generation in coming into the United States, or is it first generation firstborn? But regardless, what about all the other people that have been here for generations that are first time home buyers or that have never bought before in their lives? I mean, that doesn't seem. It doesn't
Yeah.
really answer. It seems more segregated, to be honest with
First
you.
generation
Yeah,
home buyers whose families haven't had the haven't
I've known him
benefited
before.
from generational wealth
Wow.
building. So does that mean that, like, let's say for instance, your family has never owned a home. What if like your parents rented?
Hmm.
Are you a
Hmm.
first generation because they haven't benefited from home ownership? Or what if you came to this country and you've never owned a home, but you had another home in another country? Like, what if you sold a palace in Saudi Arabia and
Right.
you moved over here with $10 million? Are you a first generation buyer? I don't
You
know.
know,
It's not clear.
it's not clear at all. In fact, I don't know. I don't agree with that at all. Let me just be honest
But
with
let's
you.
just say
Yeah,
what we suspect it means.
yeah,
It's probably for immigrants, and it doesn't even clarify what the rules are. So, as a mortgage lender, this is an honest question. Can somebody who is
right.
uh, not a US citizen buy a house?
Yeah, we do it all the time. We do it through an FHA loan. It's always happens. There's no question about
So
that.
I could,
So
so
yeah.
theoretically, we'll call them undocumented illegal immigrants, people that are not U.S.
Well,
citizens who are here against. They've passed their visas or whatever it
yeah.
is. They can buy a house.
So let's clarify that. So if you are, it's not undocumented. So there are programs that are for foreign nationals, but it's a big chunk of change down 30% that
Okay.
you can actually buy a house. Number one. There are programs for folks that are in the country legally that may have a work permit, non-permanent resident aliens. They can buy with an FHA loan. Number two, you've got regular permanent resident aliens, which are folks that have a social security number that they can buy an FHA loan, three
But
and a
could
half
you get a
percent
social
down.
security number if you came here
It takes
illegally?
it takes time. No, you can't. Not at all. It does take
Okay.
time. Yeah.
Okay. But you could.
Yes.
Okay. So theoretically, you can just come across the border, get a social security number over time, and then buy a house.
Mm-hmm. Mm-hmm.
And
Mm-hmm.
then that would be part of this first generation thing club. So yeah, I'm going to give this one a thumbs down. I'm going to say that's a terrible idea. It's very divisive. It's stupid. I mean, it has no consideration for the people's families. Like, what if you came from a very poor household
Yeah.
and for the entire time your family's been in the country for 200 years, they've never owned a home. You're
Right.
not first generation. It's just stupid.
Well, it doesn't make sense, Brian. I mean, that's what's killing me. It really doesn't. I
It's
mean, at
just
the end of the
divisive.
day, it doesn't answer the question. I mean, again, I'd rather than put $25,000 in a pot and say, you know what, this is first time home buyer, FHA loans. You don't put money down. We're going to put additional money into the insurance reserve to cover deficiencies. Okay, that's the best bet. Money, no money down, and guess what? Seller can pay 6% real estate commission. I
All
mean,
right.
6% in closing costs. It
Yeah.
answers the question right there.
All right. So
Yeah.
next up is lowering closing costs for refinancing. Policies and pilots to reduce closing costs for homeowners, including a pilot to waive requirement for lenders' title insurance on certain refinances. Save thousands of homeowners up to $1,500 and an average of $750. Lower the upfront fees will unlock substantial savings for homeowners' mortgage rates. Blah blah blah. So the lender's title insurance. If you're going to refinance, you already had title insurance.
Yeah, but it
I,
doesn't
I,
make
I
that
don't know.
big of
I
a
don't know how
difference.
this. Yeah, I
No,
was going
no,
to
it
say
has
seven
no
hundred fifty dollars. Like you're going from a 3% rate to a 7% rate in today's
right.
market. $750 is just stupid.
It's
And a
stupid.
lot of times, what the
Right.
lenders do is just roll those fees into it. It doesn't even really make that much of a difference. And you can shop around for lenders; they all have different fees and whatnot. It's very silly.
I,
All
I'll
right,
tell you. I'll tell you what I would recommend though. Let me just make a change there.
all right, let's go.
There's going to be cost incurred just because there is a certain amount of work involved in any kind of refinance. One of the areas that they put a crash on or a tightening on was they stopped FHA loans from being able to go above 80% for cash out. I mean, to me, again, your Fannie Mae, Freddie Mac has a cap of 80% for cash out refinance. FHA has a cap of 80% as well. Why not raise again that FHA cap from 80 to 90%? Because you might have some clients, some borrowers out there that are struggling or they're on the struggle
Yeah.
bus and they're looking to an idea, hey, how can I use a little bit more of this blessed equity that I have? Because you're going to continue making me pay mortgage insurance regardless, right? Why not go
All
ahead and
right.
do it that way, Brian? I mean,
All right.
that's
So
kind of a
here's my
win-win.
here's my answer to that. And this one relates to this other topic we're going to go over after we cover this,
Okay.
which is Freddie Mac's proposal to help homeowners tap home equity without losing record low mortgage rates. That's not actually true. But that to me is the ruination of our entire existence.
So here's the key to that, Brian. So let's just kind of hit on that and just be point blank and honest. You ready? I mean,
Yep.
there are two issues involved here that we're talking about. Okay,
Yep.
the number one issue, okay, and this whole scenario that we're kind of playing on is the idea that we've been blessed with this amazing equity, and they can't tap into their equity right now because, quite honestly, it's locked up. It's
Yep.
it's above a certain amount. So
Yep.
they're asking Freddie Mac to bail. You ready for this one? The
Yep.
banks out
Yep.
because they're saying, "Hey, bankers, we don't want you to take the exposure." And you know what? For me, and my philosophy is, it's not a good use of Freddie Mac. That really is not at all. I think it's
Yes. Outside of the
2007
idea that
or
that's
yep,
a federally owned agency that's getting involved in this personal finance stuff,
yeah.
I'm just going to say from a sociological perspective, the
What does it
idea
tell you?
that you're going to make it easier for people to turn their houses into piggy banks, knowing that we did away
Mm.
with, just sociologically, we did away
Oh
with
yeah,
pensions, we moved everything to 401k. The
yeah,
amount of savings that Americans retire with today is a small fraction of what it was in the
yep,
80s and 90s and
exactly
70s and
right.
60s.
Yep,
And then on top of that, the only thing that saves most Americans today, the reason why we're not in a more severe financial crisis, is the fact that when seniors finally do sell their house, they're making freaking $1 million,
sure.
and that's what they're using to move to Florida. If you allow people to now tap that easier
hmm
and pay off their cars or these 34% interest credit cards,
What are they
just
going to do,
know
Brian? They're going to go out and get more credit
just
cards,
knowing
more debt.
human nature, like just knowing human nature, it's
Killing
going
me.
to cause the amount of equity that most Americans have to diminish. It's going to cause more spending on
Right.
things that aren't good. So from sociologically, I don't think that's a good idea. From an American free market, meritocracy, I think that we should allow the markets to decide how people can touch their equity. It's their house. I'm paying for it. I can do whatever I want. So I'm going to say split 50-50 on this one.
I'll tell you what I would recommend. Again, I would change it around and say, look, the second mortgage takes the significant and entire loss. Most home equity lines are adjustable rate mortgages. The interest rates are significantly higher, right? Why not just increase the cash out refinance that Fannie Mae and Freddie Mac can do from 80% to 90% based on a credit score, based on a risk model? Okay. I mean, let's because if someone has a
Well, they
mortgage,
they have a
yep,
proposal. Let's go into that because that's a whole different thing. But let's stick with the whitehouse.gov's website, lowering the cost for home mortgages. And this
uh-huh,
is where I think the government is now inserting themselves into the free markets again.
yeah,
They're doing it with the realtors big time, and it's
okay,
absolutely nuts. We're going to talk about that. So this is vague. It says they're going to pursue rulemaking and guidance to address anti-competitive closing costs imposed by lenders on home buyers and
hmm,
homeowners. The charges which benefit the lender but not the borrower can add thousands to the upfront cost of a mortgage. The upfront cost cut into the amount of home buyers' down payments and reduce homeowners available equity. That just sounds like they're going to try to impose rules on what you can charge and how much you can charge in fees, because they already came after lenders after the
Mhm, mhm,
crisis.
mhm, mhm.
And not to get too far into the weeds, but if you're in the business, you'll understand this. Prior to 2000, I believe it was 10, lenders could charge a premium on the rate. So you could get a higher rate and they would make more money, lower rate, they make less money. It was like you could slide the scale and put money in your pocket. There was ethical ways of doing it and non-ethical ways of doing it. Ethical way of doing it was to bump the rate a little bit to help pay for closing costs, which is still possible today, but it would also just kind of help people that were less qualified and whatnot. But unethically, you could just slide the needle up a little bit, put more money in your pocket, not really explain to the buyer how that was happening. They were told your rates, whatever it was. So they put a cap on it. Most lenders in America today are on a fixed amount of money that they can profit during the sale. As an example, a lender might profit 1%. And when I say lender, I mean a loan officer. So they can't change your rate and make more money today in most cases. Now they're going after the lenders themselves and saying you can't charge more than. I feel like what's going to happen is, okay, we can't charge more than $6.95 on underwriting. We're just going to bump up the processing, or we're just going to cause, it's some sort of another fee, or the rate's going to go up to cover it because these businesses have to make money. It's dumb to think that you're just going to impose these limits on how much these businesses can make in a free market, and think that there's not 15 million mortgage companies that you can go to. They've made it so easy. You can go on Lending Tree or whatever and find 10 different, you can get 10 different mortgage companies to compete for your interest rate. That's still kind of a mess, but I don't see how that's going to do anything other than just aggravate everybody. And they're going to have to just move the papers around,
Mhm.
move the numbers on the piece of paper. Everybody's still going to do business the way they were before. Is that right, Tim? Am I off? I mean, you're
No,
a
I
lender.
I think you're right on the money, and the catch-22 is that, I hate to say this, but, lenders these days are struggling. Let's just like the real estate side, we're all having a challenge in this marketplace. There's no question about it, and, you're putting more restrictions. It's not a young person's field anymore. It's an older, i.e., right, lender in the marketplace that we're generating the business, and we're trying our best, but at the same time, with the restrictions becomes less opportunity that we can assist with our consumers. Now, if I was to do anything, quite honestly, I go back to like the HFA programs, all the state programs that are out there. Why don't we make those more affordable for our buyers? I mean,
Yeah.
that's really what it comes down to, right?
Yeah. Yeah. All right. So now we have these like vague things about tax credits to build more housing. It's only for
Yeah.
rentals. Low income housing tax credit to preserve 1.2 million affordable rental units. I don't know if I love that idea. I think the market takes care of that to some extent. Innovation for housing expansion. 20 billion competitive grant to fund as part of his budget to support communities across the country to build more housing and lower rents and home buying cost. Support the construction of affordable multifamily rental units, incentivize local actions, and remove unnecessary barriers to the housing development. Pilot innovative models. This is all just vague stuff. And when they say
Sure.
the word communities, it makes me think that they're talking about certain areas and not other areas. The idea that we're going to do this in a low income area, but we're not going to do it in a more affluent area. I don't love that idea. I just don't think it's fair, because there's plenty of people struggling in different areas. And the idea that you're going to segregate everything always creates divisiveness. And there's
Hmm.
no details on this. I have no idea what this even means or how it's going to work. So there's not any point in talking about it much longer. Increasing banks' contributions towards building affordable housing. Federal Home Loan Bank double its annual contribution to the affordable housing program
Yeah.
from 10% to 20%, which will raise 3.7 billion for affordable housing. What does that mean?
So who's the Federal Home Loan Bank?
Yeah, isn't that Fannie Mae and Freddie Mac?
It's Freddie Mac, man. Federal Home Loan Bank. My point is, at the end of the day, they're in business to help promote production. I get it. Change the guidelines, make things more affordable. Put some different guidelines into the picture for first time home buyers. Let's kind of enhance it that way. Giving money back doesn't help. It doesn't solve all of the programs
Well,
or all the
what is the
problems that are out there.
affordable housing program that they're referring to?
So the affordable home housing program is typically either one of three things: 3% down, reduced PMI, some way of gauging it to give people a little bit more enhancement. And you're going to love this. The way they did it was they lowered the points, so the cost and the rate slightly for first-time home buyers, and they raised it for those people that had really good scores.
Oh, so you're taking money from the rich and giving it to the poor.
We call it Robin Hood. Yes.
Robin Hood program.
There you go. The RH program, man. It makes no damn
It's
practical
it's like
sense.
what's AOC has that T-shirt she wears all the time. Tax the rich.
There you go. Yeah.
So
And
by rich, what they mean is somebody who has good credit, not somebody who makes a lot of
right.
money per se.
Correct.
So you
Exactly
could be
right.
buying like a $250,000 house with 700 credit,
And you're getting penalized because
and you're
you've got
getting
great credit.
penalized as somebody who's
Yeah.
buying a house that is 500,000, but they got terrible credit.
I hate when that happens, man. I really do. Yeah.
This
Yeah.
is horrible. Thumbs down.
Yeah, not so much. I love for them to talk to maybe the local guy that's in the trenches. Bring a couple local agents, bring a couple local real estate lenders. Let's sit
Yeah.
down and really talk real stories, not this pie in the sky crazy. Let's give them
It's
a
always
tax
divisive.
refund.
There's nothing in here that's not
No,
divisive. That's always
not at
segregating
all.
people by different things that aren't what if you got everybody in a room and asked them what's fair, most people
Hmm.
would not agree to this. So I think it's just like politics. It's just divisive politics, which is, par for the course for today. All right. So now let's talk about I'm going to call this the piggy bank program. This is what I was discussing earlier. Freddie Mac proposes product to help homeowners tap home equity without losing record low mortgage rates. So what they're saying is the program today that if you want to do a refinance or if you want to do a HELOC, you got to take on today's rates and you're stuck with whatever the market delivers. They're going to create a program where you could take out a second mortgage with a 20-year term on it. So you're expanding the terms and you're locking it into what is structurally like a rate in term. Am I saying this correct, Tim?
Yeah, that would be the thought process. But Brian, we already have them.
So
We
what's
call them
different about this
banks
proposal?
and credit unions.
Yes, but what they have is like an open-ended
Yeah.
interest only
So
payments. They're
there are
talking
second
about like a
mortgages.
rate
No,
in
you can get a second mortgage right now, a fixed second. There's nothing. This is nothing huge creative. It's just they're doing it through a main source and hopefully a little bit of a lower interest rate or lower cost. But Brian, at the end of the
so
day, all you're doing is eating up their equity and turning around and exposing our country to another financial default.
okay, so just to kind of break this down, if you want to get a mortgage on the market, you have to go to a bank or a mortgage
Credit union,
lender,
sure,
a credit union, and you're going to deal with the market. You're going to be asked to put
correct.
5, 10, 20% down. You're going to deal with the market. Now, there
Or
are these
0% down with the
or
VA or
0% down.
0% down with
No, 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 no,
USDA.
no. Hold on. This is my point. Those are subsidy programs. If we want to use a different term for it, those are technically subsidy programs.
Okay.
FHA, VA, USDA are
Mhm.
subsidy programs that are partially owned by the federal government that
Okay.
allow for people to put less than the market rate of whatever it would be as far as the down payment. Anytime you're putting less than 20% down, the bank assumes that you're putting them at some level of risk and you have to offset that by a higher payment or higher fees up front, whatever it is.
Mortgage
And
insurance. That's
mortgage
already it's already
insurance,
done.
it's already
Exactly right.
done, but
Yeah.
the feds are giving programs that allow people to circumvent that process to some extent. We pool everybody's money together and the government backs it up, and that's how they do FHA, VA, USDA. So you're saying that this is essentially the same version of that by backing it up by the federal government and FHA or Fannie and Freddie. This one is Fannie, I believe. No, Freddie. This is a
It's
Freddie one.
Freddie. Yeah.
That they're going to be able to give better terms because they're doing this as a subsidy.
Bulk. Right. Bulk and as a subsidy. But at the
So,
same time, the market already supports it. Why are we doing this? This has no benefit whatsoever. You know what I mean? The benefit's limited. It really is. Why
all
don't we
right.
just go to a 40 or 50-year mortgage?
Yeah.
That's the benefit. You know what
Yeah.
I mean?
I
Let's
just
go
don't
in
love
that
the
direction.
idea of giving Americans the idea to tap their equity super easy. I think that is going to be the downfall of our civilization. It's the last place that people are able to store a large amount of money for retirement.
Sure.
And when you turn that into a piggy bank, it might be
It's not good.
fair market policy, but at the same time, I don't know if it's a great idea. So I'm conflicted on it again. All right, now let's talk about. We're going to switch gears and talk about the realtor side of our world.
You
And
saved a lot of things up for this topic, man. I'm pretty impressed.
well, I'm going to chop this up because I don't know how many
Right.
people are going to stick through this, but I think we can make a couple videos in between.
Rock it out, man. What you
So
got?
policy changes. So first of all, the DOJ reopened an investigation into NAR. They basically came to a settlement, and then they said, we're going to change our mind and we're going to reopen the
Sure.
investigation. We're going to
Yep.
allow ourselves to like change the rules again after we agreed to them. That's one thing. On the other hand, they've already come to some agreements with these lawsuits. 2 agreements that are going into effect. One is in July. No realtors are allowed to show houses without having a buyer's agency agreement signed.
Is that in place right now?
It is.
Wow. Crazy.
So how do you feel about that, Tim?
Well, I honestly, on the one side of the coin, quite frankly, I think it's a prohibition to doing business. Period. End of story. I hate to tell you that, in my opinion, and I know this is kind of nuts, but you know what? Why are we holding back on the capital system that we have in place? It works. It really does. Now they're saying that you're not going to be represented. To me, a real estate agent that's worth their salt has got them to sign into some kind of agreement to say, hey, listen, you're representing me. You're paying me a retainer, just like a lawyer, right? It makes sense. But why put in another guideline that says you can't do it? I don't understand that at all.
So here's a real world example that happened to me last weekend. I got a text message from an agent who has a listing near my house.
Yeah.
He's over an hour away. He said, these people want to see this house, take this client if you want, whatever, have fun.
Sure.
Called the lady up. They're German, speak very broken English.
Okay.
And I was like, what's going on? She said, I want to go see this house. I'm interested in it. She was like 10 minutes away. I was 15 minutes away. This is exactly what happened.
Sure.
I said, okay, great. I'll see you at the house. So I'm going to have to stand in front of this house to this husband and wife who I've never met before and try to explain to them that in order for me to let them in the door, they have to sign this paperwork and they have to agree to pay me money. Versus the idea that I could show them the house, and if they like working with me, they can choose to let me represent them, or they could say, hey, I don't like you. I don't want you to represent me. And theoretically, I could put that in the paperwork as well. But the idea that I need to make them sign that standing in the parking lot of the house, I think is not a terrible idea. But I think the way that it's going to roll out initially is just very, very hard to make people sign things. It just doesn't make what you said, doing business, easy. It's like it's just very hard to explain. And the idea that I can sell them on me as a real estate agent, as we're standing in front of this house that they asked me to go show them only 15 minutes ago, and think that I'm going to show them some sort of value. Now, theoretically, what I'm supposed to do is take them to my office, sit down with them, give them a whole presentation, tell them all the things I do for them. They're actually only in town for 2 days and they just want to see this house. They probably aren't going to buy it, which they didn't. And it just, I don't know if it's a good idea. All right.
I think there's a couple pieces missing here. Number one, remember, you're representing, in essence, this couple coming in. How do you know these people are legit? How do you know if they qualify? How do you know they're not somebody who's getting ready to break into the house and they're just kind of caging the joint? I mean, honestly, that's part of what you guys do too. I mean,
all
it's
that's
not
true.
just showing a house. Okay?
All that's true. So in reality, you're right that I should take them and say, I'm not going to show you the house.
Right.
You have to come to my office. I want to look at your driver's license.
I don't think you need to have them come to the office. If they've been pre-qualified by a lender and you've talked to the lender and you've got a copy, copy of the pre-approval letter.
They haven't.
You got to have something, because Brian, otherwise you don't know what you're staging yourself for. Oh, they're German. Who knows if they're German?
No, I talked to them. Like, I'm just saying, there was a language barrier. So that a whole idea of like trying to have this conversation with somebody who English is their second language and their English is very hard, was just made it even harder. So just to kind of give you an idea of what we're dealing with. All right. So second up, and this one is what I think is absolutely crazy.
Okay.
They are now, as of August, eliminate and prohibit requirement of offers of compensation in the MLS between listing brokers or sellers to buyers, to broker buyers or other buyer representatives, meaning we are not allowed to put in the MLS. Why it's the MLS, I don't know. But we're not allowed to say we're going to pay a buyer's agent. So let's just break this down really quick to people that don't
There's
understand how
nothing
this
going to be
works.
broken out there at all. Really, there's no place to comment.
So not only that, they don't want you to put it somewhere else.
So how do you now, as a real estate agent, tell your, I mean, I hate to say this, but tell your seller, listen, it's important to pay a real estate commission, because in this particular case, agents are going to look at you and say, hey, you know, he's paying no commission. He's paying 3% to the buyer's agent. Who am I going to represent? I'm probably going to take you more to the 3%. If you
well,
take that away, what
let,
kind of exposure do you have, Brian? I mean,
well,
that's huge.
let's talk about transparency, right?
Yeah,
So let's say, for instance, that we do have a qualified buyer who we are working with, who has
sure.
agreed to sign our agreement and has agreed that they're going to pay some or none of our commission, and we're going to go through this together. I now have to call every single house, every single listing agent for every single property that I want to see in order to disclose to my client what the compensation is. Let's say, for an example, we've negotiated that they have to pay me a minimum of 1% if no compensation is paid. Like, I won't do this for free. You have to pay me something. You
Sure.
have to pay me a minimum of $5,000, whatever this is. Like, I don't work for free. You don't work for free. It's just, that's America.
Well, it's like getting representation. You don't go to court without a lawyer. I mean, let's call it what it is, right?
Okay. So in that
It's a
event,
retainer.
there
Yeah.
are certain houses that are paying nothing, but I don't know that. There's no way for any of us to know that. The only way to know that now is I have to
Wow.
call all of them, trying to get a hold of real estate agents on a Saturday to go show properties. Now they found another house they want to go see. I got to call that real estate agent. They have to pick up the phone. Hey, how much money are you paying? Well, it's negotiable. Well, it's negotiable what? Now I have to go back to my client and say, well, do you want to see it? If the example is that they're saying I'm not paying any buyer's agent compensation, if the buyer wants to get representation, they have to pay their agent 100% out of their pocket. The buyer might decide not to go see the
Right.
property.
Mm-hmm.
And you've added an entire level of complication to the process, and you've removed all transparency from the process. The workaround that they had come up with was put into the MLS description that the seller is offering a concession to be used however the buyer wants to use it, of up to however much percent.
Oh, wow.
And then the buyer can then know up front what's happening. However, the rule says eliminate and prohibit MLS participants, subscribers, and sellers. You, as a home seller, are not allowed to make any offer of compensation in the MLS to buyer brokers or other buyer representatives. So it still could be the case that you do it that way, but the idea that you're going to just make it absolutely not transparent under all circumstances does not make any sense whatsoever. I can't understand how you would make an argument that says this makes doing business better for buyers. It just absolutely makes it worse all the way around.
It's going to be a challenge, because let's face it, the buyer agency previously to this settlement, it wasn't an issue. I mean, honestly, it was like, you know what? You didn't really have to negotiate. You didn't have to justify your fee. You just went out and said, let's go see some houses. Now, I would not prohibit myself from having to call every agent to find out what the commission is. I would just have the conversation up front with my buyer and say, look, sellers pay different compensation for buyer's agent.
Okay,
And
but what if the house is an hour and a half away? We have to get in our car and drive up there. Wouldn't you want to know ahead of time? Am I going to have to, like, I've saved up my down payment, I've saved up my closing costs, and I've saved up $5,000 to pay Brian, but I don't have any more. And whatever it is. Now, this house that's an hour and a half away,
right,
claims, I don't know what they're paying. Am I going to get in my car and drive up there only to find out they're paying nothing?
Yes, you are. The reason why you're going to do it is, honestly, you're going to do it three ways. Number one, you've had this very important conversation with your buyer up front. They understand the importance and the validity of you as an agent. In fact, what most people think about is when I pay a real estate agent 2-3%, whatever it is, I'm paying it for the one-time occurrence the next 30, 60, 90 days. What you got to understand is the valid, really the intelligent, the sharp real estate agent understands that this is not just a one-time deal. You're paying this retainer fee to keep me as your agent for life. That's an entirely different process.
Well, technically,
I'm
that's
gonna
not
I'm gonna
true.
watch
But
out for values going up. I'm gonna watch for interest rates
I
going
mean,
down.
technically, that's not
Uh,
true because once the
well,
contract is over, then the contract becomes null and void. So it's technically not true.
no, yeah, except for the relationship continues, and
Yeah, of
that's what you're
course.
paying for. Yeah, but a lot of agents don't. A lot of agents don't follow up. They don't do their annual reviews. They're not out there talking to the clients every 6 months. They're not calling them, letting them know what their value has done and changed. They're not telling them, hey, listen, you have a 4% interest rate. Rates have come down to 3. Let's refinance. They're not telling them about all the other options out there. So number one, you have not justified your fee. Okay. Number two, I would go out there. Why? Because quite frankly, I'm going to drive out regardless. I'm going to see the house. And then when we come out, we find out, they're paying 0. Guys, here's the deal. We're going to have to negotiate by top loading it all in the sale price to incorporate it into the purchase price of the house. That's
Yeah.
number two, right? Or number
Yep.
three, hey guys, listen, I know we originally looked at doing an FHA loan with 3.5% down. Why don't we look at doing a USDA loan with no money down in this particular case? That way you have the ability to pay my fee, my retainer fee of X, be able to make this process occur. Brian, to let this stop, it's fear, false evidence appearing real, right? Turn
No,
it
I
around,
I
change the
I kind of
perspective.
agree what you're saying, Tim, in the sense that there is a way to do this. But what I am saying is that the net result of all this is that it is going to add the burden onto the buyer and of the idea of just doing business in general. Like one of the other rules is prohibit the use of, it says requires, do not create, facilitate, or support any non-MLS mechanism, including by providing listing information, like there cannot be a website. Like you can't go find this information on any website anywhere. The only way to find it is to call the listing agent and or write an offer and send it in and then do business that way. I just feel like the way that real estate works is
Mhm.
people pay real estate agents because they don't like this sort of hard negotiating over these big numbers that they don't really understand the implications of. They want to trust somebody else to do that.
Correct.
And to think that they're going to be forced to make these decisions on the spot, am I paying a realtor? Am I not going to pay them? They're only paying them this much. Do I want to pay them that much? Do I want to fire this realtor in order to buy this house? It just adds this completely crazy level of complication. The way that it was set up, the sellers agreed upfront to pay the buyer's agent a certain amount of money. The
Yeah.
buyer's agent knew what they were getting paid. The buyers, it's also been transparent for a number of years where that information is publicly available, where the buyers could see what their real estate agent was getting paid. It's all in the paperwork. Everybody assigns it and agrees to it. It's just a terrible thing for doing business. And I think it's ultimately just going to make it harder for buyers to get good representation without having to pay out of pocket. And I think that just adds another layer of a burden to the buying process, which is the hard side of things right now. It's not hard to sell, it's hard to buy. So that's my thought.
Well, I agree with you on that. That I think that's the key. I don't think that's an issue. It's going to be more challenging, but at the same time, to me, it's going to be a better way of understanding the process for all parties involved. I mean, it is what it is.
I hope so, Tim. I would like to come back in a year and say Tim was right.
All right,
We'll
let's
figure it
record
out
this.
because we'll be here.
July 2nd, 2025. We're going to come back and we're going to re-record this. All right,
All right,
man.
Tim. It's been a
All right, brother.
pleasure. We covered everything today. We got it all in, man. Thank you.
Have a good one, man. Talk to you soon.
That's a wrap, bro.